Last week, the cryptocurrency exchange FTX filed for bankruptcy, and its chief executive, Sam Bankman-Fried, resigned, a downfall that has stunned crypto insiders and sent shockwaves through the industry. The collapse capped days of whiplash for FTX after its rival and the world's largest crypto exchange, Binance, pulled out a deal to acquire the company. On Thursday, FTX's new chief executive, John J. Ray III, said in a bankruptcy filing that he had never seen such a complete failure of corporate control. Mr. Ray had helped manage the aftermath of some of the largest corporate collapses in history, including the implosion of Enron in 2001. FTX is one of the world's largest cryptocurrency exchanges. It enables customers to trade digital currencies for other digital currencies or traditional money, and vice versa. It is based in the Bahamas and was run by Mr. Bankman-Fried. It has spent millions of dollars lobbying U.S. legislators to institute crypto-friendly regulation. The company had built its business on risky trading options, not legal in the United States. The crypto industry had increasingly been the target of regulatory scrutiny on Capitol Hill and across the globe. Not long ago, FTX was one of the world's largest trading platforms for cryptocurrencies. Founded in 2019, the Bahamas-based crypto exchange had a meteoric rise to prominence and was valued at more than $30 billion earlier this year. All that has changed in the past 2 weeks. First, concerns emerged about links between FTX and an asset trading firm called Alameda Research, including suggestions that customers' funds had been transferred from FTX to Alameda. A few days later, Rival from Binance, the biggest crypto exchange, announced it would sell its holdings of FTT tokens, a crypto that reportedly compromises much of Alameda's assets. Panicked customers rushed to withdraw funds from FTX, and the company is now on the brink of collapse, with a banner message on its website announcing it is currently unable to process withdrawals. This is not the first such rapid disintegration we've seen in the loosely regulated world of cryptocurrency, and it's unlikely to be the last. No rescuers in sight. The majority owner of FTX in Alameda, Sam Bankman-Fried, had rescued other troubled crypto companies earlier this year. Now he's desperately looking for an investor with a lazy $8 billion to save his companies. Many firms have already written off the value of their stakes in FTX, so it will not be easy for Bankman-Fried to find investors willing to put in new funding. Binance thought about taking over the troubled company outright. It decided against it, citing concerns about allegations of misconduct and an investigation by the U.S. Securities and Exchange Commission. The price of FTT has now plunged. A week ago, it was trading at $24. Now it's at less than $4. Cautionary lessons. Trading in assets with no underlying fundamental value on loosely regulated exchanges is always going to be a very risky endeavor. For many, it's likely to end in tears. Other kinds of an asset are different. Company shares have a fundamental value based on the dividend, or at least an expected future dividend, paid from the company's profits. Real estate has a fundamental value that reflects the rent the investor earns, or the owner-occupier saves. The value of a bond depends on the amount of interest it pays. Even gold has practical uses for jewelry, dental filings, or electronics. But so-called cryptocurrencies such as Bitcoin, Ether, and Dogecoin, and thousands more altcoins and meme coins have no such fundamental value. They are a game of pass the parcel in which speculators try to sell them to someone else before the price collapses. Unregulated financial institutions are prone to the equivalent of a Depression-style bank run. Once doubts emerge about their soundness, each person has the incentive to be early in the queue to withdraw their money before the money runs out. In a recent interview, Bankman-Fried described a business model which seems to rely heavily on funds injected by new investors, rather than on future returns based on intrinsic value of the asset themselves. Impact on crypto. These events have further eroded confidence in the crypto ecosystem. Before his latest fiasco, the value of cryptocurrencies had already dropped from a peak of more than $3 trillion to $1 trillion. It has now fallen even lower. Just as a few stars, such as Amazon, emerged from the wreckage of the dot-com bubble, so it is possible that only a handful of applications on the blockchain technology that underpins crypto have enduring utility. And the idea of an electronic form of currency is realized in the form of central bank digital currencies. But as Hyun Song Shin, the chief economist of the Bank of International Settlements, put it, everything that can be done with crypto can be done better with central bank money. How is this affecting the crypto industry? The cryptocurrency industry has long struggled to convince regulators, investors, and ordinary customers that it is trustworthy. The collapse has kicked off investigations by the Justice Department and the Securities and Exchange Commission focused on whether FTX improperly used customer funds to prop up Alameda Research, a trading firm that Mr. Bankman-Fried also founded. When the cryptocurrency market experienced a $2 trillion crash in May, FTX offered financial lifelines to several collapsing firms. Its fall has rippled through the industry. Lenders such as BlockFi and Genesis have announced pauses in operations. The price of FTT, a native cryptocurrency token for FTX, has dropped more than 90% since November 8th. Bitcoin is down about 19% this month, and Ether is down about 24%. Why did FTX run into trouble? Traders use FTT for operations like paying transaction fees. Last year, Changpeng Zhou, the chief executive of Binance, sold a stake in FTX back to Mr. Bankman-Fried, who paid for it partially with FTT tokens. On November 2nd, the crypto publication CoinDesk reported on a leaked document that appeared to show that Alameda Research, the hedge fund run by Mr. Bankman-Fried, held an unusually large amount of FTT tokens. Alameda's need for funds to run its trading business was a big reason Mr. Bankman-Fried created FTX in 2019. But the way the two entities were set up meant that trouble in one unit shook up the other as crypto prices began to drop in the spring. Binance announced on November 6 that it would sell its FTT token due to recent revelations. In response, FTT's price plummeted, and traders rushed to pull out FTX, fearful that it would be yet another falling crypto company. FTX scrambled to process requests from withdrawals, which amounted to an estimated $6 billion over 3 days. It seems to enter a liquidity crunch, meaning it lacked the money to fulfill requests. How did Binance intervene? On November 8th, Binance said it had reached an agreement to bail out FTX by buying the company. But Mr. Zhou added in the announcement, Binance has the discretion to pull out from the deal at any time. In a concurrent announcement, Mr. Bankman-Fried said the deal would protect customers and allow FTX to finish processing their withdrawals. He tried disposing of rumors of conflict between FTX and Binance, adding, "We're in the best of hands." Why did the deal between Binance and FTX unravel? On November 9th, Binance announced it would no longer buy FTX, saying it had arrived at the decision as a result of corporate due diligence. It also cited regulatory investigations and reports of mishandled funds. Every time a major player in an industry fails, retail consumers will suffer, Binance said. We have seen over the last several years that the crypto ecosystem is becoming more resilient, and we believe that in time the free market will weed out outliers that misuse user funds. The aftermath of FTX downfall. The sudden collapse of the crypto exchange has left the industry stunned. A spectacular rise and fall. Who is Sam Bankman-Fried, and how did he become the face of crypto? The Daily charted the spectacular rise and fall of the man behind FTX. A symbiotic relationship. Mr. Bankman-Fried built FTX partly to help the trading business of Alameda Research, his first company. The ties between the two entities are now coming under scrutiny. Missing assets. Lawyers for FTX and a substantial amount of the company's assets had either been stolen or were missing, casting doubt on the odds of recovering billions of dollars in crypto that customers lost. A bid for influence. In just 3 years, Mr. Bankman-Fried built a massive operation to woo politicians, regulators, and nonprofits to support his crypto goals. With this, we'd like to end this video. For more such content, you can subscribe to our channel.